With just half a day's trading to go on Monday, New Year's Eve, it's a good time to look back at what happened in 2018. It wasn't the best for Australian shares, down 8%. Our currency lost 11% against the US dollar. Official interest rates held at a record low, while economic growth slowed at 2.8%. So, what does 2019 hold? China and the US, their relationship, along with their own domestic issues, were the biggest factors influencing the world and Australian economies in 2018.
And that's going to remain the case in 2019.
The ongoing trade tensions between the world's two biggest economies have unnerved investors, but it seems to be in the best interests of everyone for a resolution to be found.
Donald Trump does not want the US economy to go into recession and unemployment to rise because he wants to get re-elected in 2020. So he wants to strike a deal.
It would help heed China's economic slowdown, currently growing at its slowest pace in nearly 10 years, and help to keep the US bubbling along.
The US economy is in incredibly good shape. The unemployment rate is at a very historical low, and consumer spending remains in good pace. And while fixed business investment has come off, it is still growing strongly.
It was enough to encourage the US Federal Reserve to continue to lift interest rates there 9 times since 2015, with rates climbing above Australia's official cash rate.
And that also tends to pressure the Australian dollar lower on interest rate differentials.
But the US Central Bank could take a breather next year.
At least through the first half of the year, the US Central Bank will go on pause on the view that they've already got interest rates up to levels that they're a bit more comfortable with. Inflation's still pretty much under control, so they can sit back a little bit.
The Fed seems to be a little bit more cautious about the global economic outlook and the downside risks attached to that.
Any global economic slowdown would hinder demand for Australian exports, especially commodities to China. While international factors may influence the direction of the Australian economy next year, locally it's the housing market which may have the biggest impact.
Now that's going in reverse, and you're going to get what I call a negative, or economists call a negative wealth effect, where house prices come down, people feel poorer and they spend less. So that's going to be a big drag on our growth next year.
And prompt assistance from Australia's central bank.
I think the Reserve Bank will cut interest rates in the second half of 2019.
It's not a widely held view.
We're not looking for a movement in the cash rate in 2019 or 2020.
But what is agreed is the continued volatility in our share market, at least in the short to medium term.
And there's nothing wrong at looking at capital preservation rather than growth, and it might be the smart move in the first half of 2019.